What's good, man? Happy Easter, everybody, and happy Sativa Sunday, man. Happy Sativa Sunday. Welcome to the show. This is your favorite stock market show for fundamental, macro, and technical analysis. I'm your host, Zeta Wealth Strategist, and I hope everybody has had a great resurrection weekend. So before we even get into all of the good stuff, I want to shout out all my good friends that hosted Easter egg hunts for my kids this weekend. So we had 2 Easter egg hunts for the kiddos this weekend. So I just was getting back, been running around all day. We just had one. So, but just to see the joy on the kids' face, it even like took it back to when I was younger and had Easter egg hunts. So just want to shout out to everybody out there that's, celebrating Easter, doing it for the kids and stuff, man. What a great Sunday. So, we're going to go ahead and hop right into it, everybody. So for those who, are actually tapping in, listen, I appreciate your time. I know today is a day where, most people probably with family, y'all cooking out and all of that. So if you are able to tap in, listen, I definitely appreciate your time. And if you can't and you watching replay, listen, I totally understand. You know what I mean? So, but with that being said, I just got a text. I wanted to see something. Okay. So cool. We about to rock. So with that being said, y'all already know what the agenda is for tonight, right? We're gonna go ahead. We're gonna get into what happened last week, and recap, basically the things that we talked about a little bit. And then we'll get into this week's preview. So we got a lot on our table or on the table this week. So we got a lot of things to discuss, right? We're going to get into a little bit of technicals and break down the market and then kind of see what some probabilities are. And then, of course, at the end of it, we'll get into a little bit of like Q&A if anybody has any questions and stuff in the comments, right? So as we talk about the comments, right, make sure y'all like, share, and subscribe to the channel if you already haven't. Also, drop in the comments where you tapping in from. You know what I'm saying? Show me some love. I want to see who I got tapped in tonight. So go ahead and do that. So we went through the agenda. Cool. Now, before we get into the episode, let me go ahead and get through a few announcements. So, of course, I got to give a big shout out to the runner family, right? Got to shout out to the runners now. We do have roughly about 30 spots left. So if you are looking for a family, you know what I'm saying, the link is down in the bio if you want to join the runner family. Right. Number 2, gotta shout out my sponsor. And I'm so mad that I don't have this website up, but shout out to Kaniba, man. It's funny because my mom is in town and so she smokes cigars, and so I actually gave her one to try. So she's loving it, right? So let me go ahead and share the screen here. Gotta shout out my sponsor. So if you don't know and you are new to the show, Kaniba is a new company that makes hemp cigars, right? They are a healthy and more natural substitute for cigars that are made of traditional tobacco. And so they offer a more healthy and more organic substitute, right, by utilizing premium health hemp and CBD, right? So no nicotine, no tobacco, no fillers. And so if you go to this website right here and you use code Sativa Sunday, you do get 10% off your order. And just to show y'all, let's go look at a few of the flavors real quick. You know what I mean? Let's go look at a few of the flavors. So they got some pretty dope flavors. You got your lemon runts here. You got some golden pineapple. Man, this gas berry definitely is a nice flavor to, go ahead and tote on. So, if you go check them out, like I said, just type in code Sativa Sunday. You do get 10% off. So shout out to my sponsor, Kaniba, and appreciate my brother, David Boone, man. So, with that being said, I'm going to go ahead and take this down. We're going to go ahead and get into today's episode, man. So today's episode is bank earnings and inflation data / is volatility dead, right? Now, before we actually get in, I see everybody tapping in now. Let me show some love to my people in the chat. So I got my boy Dre in the building. What's good, Andre? She say happy Sativa Sunday. I want to say that's Altariq. I hope I'm saying that right. Altariq Banks. What's good, family? He said, can you look at Pawn at some point? I feel like it's a sleeper. Sure, I could definitely take a look at that at the end of the episode when we get into the technical part. Watching from Guyana. Hey, man, I'm getting some international love. I appreciate you, family. Maine, Renegades, appreciate you, Christine. Tapping in from Detroit. That's my boy, Richard. We got KC tapping in from Vegas. Look, we're getting some love. Right? We got Clive from Boston, Massachusetts. All right, that's what's up. That's what's up, man. Hey, we got people from all over showing love. That's what's up. All right, y'all. So, like I said, today's episode, right, is all about bank earnings and inflation data, right? Is volatility dead? Now, let's just kind of get into last week. Now, y'all know I got to go to my handy dandy weekly traders outlook, as well as this week we're going to be using Wells Fargo as a resource. Now, I like Wells Fargo's look they report because they show you it on a chart, but they also give you like the highlights, right? So I'm gonna tie both of those in as we recap last week and when we get into this upcoming week, right? So when we kicked off the week, right, or last week, you know what I'm saying? The big things was when we was getting ISM data and NFP Friday, right? But NFP Friday, the market was closed, right? So we'll get into that in a second, right? But at the beginning of the week, OPEC announced that they were cutting the oil supply, right? Now, we kind of need to talk about that for a second before we go ahead, because we really need to understand what's the impact of that, right? Now they're cutting the supply of oil, which, if China's coming back online, that's just, demand's going to go higher. Think about it. We're about to go into, the main spring and summer driving season. And so the demand for oil could be higher, right? And if you cut the supply and you put less barrels on the market, what's that mean? The prices have a probability of going up, right? And so with OPEC essentially doing this cut, it's helped providing a floor under oil prices. And when you think about the U.S. having to refill the reserves that they've been depleting, this summer, we could see oil, right, go back up, right? We could definitely see it go back up. Pay attention to gas prices. I think around my way, I'm kind of seeing it kind of creeping back up. But really pay attention. Last week when we talked about potential opportunities, energy was one of those markets where it led last year, but it was kind of down this quarter. And we, based on the performance and stuff, and we was like, hey, energy could be, something to look at. So when we get into the charts later, we'll take a look at some energy. But at the end of the day, OPEC announced a cut. So this could be a potential tailwind for energy that helps, propel it as we go into the summer. Because the cut, let me remind you guys, the cut doesn't go into effect until May. All right. So remember that it doesn't go into effect till May. So you really ain't gonna see it till about June, July, right? That's when everybody driving for the summer. So, people could start to rotate into energy now to get ready for that. So just be mindful, right? Then as the week went on, next thing you know, we got the ISM manufacturer data. So that came in worse than expected, right? And then we had Janet Yellen talking about how the banking turmoil had stabilized. We also got JOLTS that was weaker than expected, and we got some more ISM services data that fell. Initial jobs claims came in a little bit higher than expected, and as you can see, the 2-year Treasury fell. And so we'll get into some more of that. But if we go to the outlook and just for economics recaps for last year, and let me kind of make that a little bit bigger so you can see that. So as you can see, right? So did anything come in better than expected? No. And durable goods was kind of on target, but as we said, construction spending was worse than expected. ISM was worse than expected. ADP was worse. JOLTS. I mean, it doesn't look good for the economy, right? All the data, and as you can see, right, while virtually all of the economic data was disappointing, the most unusual thing about this week is that March, the monthly employment reports will be released on Friday, even though the equity markets are closed for Good Friday on Easter, right? So while traders won't be able to react to those reports until Monday, the recent trend on the JOLTS and initial job claims might provide some input. So we don't even have to worry about that because we saw what those numbers were. And so I can go to Forex Factory, right? And we actually can go to what the NFP numbers was. And so it was 311 to the 244 that was forecasted. So it came in a little bit higher than expected, as well as unemployment went back down. So the futures, I think the futures market is open right now, but if we go look, and I'll just show y'all, let me just go ahead. I might as well just pull it up so you can see. So Friday, the futures market was open. Now I'm using the US 500, but as you can see, when the data came out, it was a green, right? So we basically would have gapped up. Now, as you see, futures market is going down, so it's back down. But either way, the market SPX closed Friday at 4105. And as you can see, the US 500 is at 4107. So if this stays kind of even now until the morning, we'll basically open up, kind of flat, and we'll probably pick a direction from there. But I wanted to just kind of recap last week. So that was really last week, right? So, the week before, I was just saying, hey, look, we're going to get a bunch of data. It's all about how does the market react. So let's just kind of recap. So at the end of the day, with all of that news that came out, we managed to just be flat. We just managed to be flat. That we didn't, at the end of the day, the market was flat. It was 0.13 for the week. And let's go to the assigner board because I actually show you. So what actually outperformed? And let's pull this up real quick. So we look at last week, right? What actually performed was gold did pretty good. So Barrick was up 6.25. XLV, so some healthcare companies did okay, right? And then utilities was up 3.3. XLE was up 2.6. TLT was up 2. XLC was up, and then XLP was up, right? And then the things that kind of just underperformed was TBT was down 4.3%. You had SMH down 4.1%. You had XLI, and industrial's been getting smoked. They was down 3% as a sector. XL consumer discretionary was down 3% as a sector. Tech was down 1.2. Materials was down 1.2. China was basically down 0.8. Real estate was down 0.75, and then you had financials down 0.5%. So that was basically, these are quarter to date. That was how the market performed at the first week. So we saw a little bit of a rotation into gold, in healthcare and utilities, very defensive sectors. Now, if you was watching last week's episode, we talked about it. Were those the potential opportunity areas because they had the worst quarter last quarter? So is this trend going to persist? Is, one of the things that you may want to pay attention to and kind of look out for, right? So with NFP happening on Friday, I wanted to go through that and just show you like how the market reacted. That brings us into this upcoming week, right? That brings us into this upcoming week. Now, when we look at this upcoming week, and let me kind of just zoom in here so y'all can see that a little bit better, right? When we come into this week, and this is the reason why I titled the episode what I did. Bank earnings and inflation data, right? This is basically what this week comes down to because we get CPI on Wednesday, right? And not only do we get CPI on Wednesday, we also get the FOMC meeting minutes. Then on Thursday, we follow that up with the core PPI and PPI numbers. And then we get core retail sales and retail sales numbers on Friday, along with consumer sentiment. So, and then on Monday and Tuesday, it's a host of Fed members that speak, right? And banks kick off earnings on Friday. So, it's a lot to break down, right? It's a lot to break down. So let's start with the inflation data, right? Let's get into the inflation data a little bit. So looking ahead to the inflation data, now I'm going to reference some data that I got from this Wells Fargo report as far as expectations for next week, okay? So next week, all eyes will be on the U.S. inflation data from March, right? And that's what we were just saying, right? As investors look for clues as to the Fed's or clues to the future course of the Fed monetary policy. Now, we know we have a meeting on May 2nd and 3rd, right? And so the question is, are we going to get a 0.25? And so this data that we're going to get this week is going to be very important to that decision. Now, as we look, the CPI is expected to come in at 5.2. That's the headline number, right? Year over year, easing from the February 6% annual gain. Now, let's go take a look at the CPI year over year. As you see, expectations are at the 5.2. And let's change this to a line and let you know that's, as you can see, that's a pretty steep, decline here, right? And so if we get down to 5.2, that puts us right where we were in the summer, basically summer of 2021 before inflation really started to take off. And this is kind of be that area where do we start to see us start to plateau, as well as we're starting to get close to that Fed terminal rate where if they do one more rate increase of 0.25, they'll be at 5 to 5.25. And if CPI comes at 5.2, are you at that point where now you can pause, right? And kind of now this is the firming, right? You hold for longer to see, okay, can this trend persist with CPI, right? And so we have to think about, if this CPI does come in at 5.2, what's that? Essentially that will cement, okay, the 2.5, and how will the market react to that? We'll have to pay attention. Will it cheer it on or not? We'll get, when we get to the technicals, we'll kind of interpret that and see what we see. But but just letting y'all know, Wednesday, that's gonna be a crucial trading day, right? Because when that data comes out, you probably expect some type of market reaction. On top of that, right? On top of that, the FOMC meeting minutes come out. So when we get verbiage from that on top of CPI, this could definitely be a wild trading day. And then you follow that up with the PPI numbers. And again, it's just going to be what's that trend there, right? And if we go look at the line chart on that, this is kind of crazy. I guess we will just go look more at the PPI numbers and no real trend there. So, I would say that PPI or CPI is going to have more of an effect on core on the market than PPI, the PPI. But again, with the way how algos are and stuff like that, it could be anything. Then come on Friday when we get these retail sales numbers, right? That's really going to tell us about the consumer strength. And if these keep coming in negative, once again, if these numbers come in negative, how is that going to impact the market? Because ultimately that would mean that revenues and sales could be coming down because people aren't spending as much. People are starting to pull back, right? Is that the sign of a recession, or is the Fed rates working, right? That's all the questions that we may hear or be asked, and kind of that's how you will be thinking, right? Then we also get consumer sentiment, right? We also get consumer sentiment. That's another big impact on how our consumers feeling, and again that could impact the market, right? So, so as we go through that, and I was looking ahead, so the point that I wanted to make is that it's supposed to come in at 5.2, easing out. Meanwhile, they said that core CPI, which excludes the food and energy, could come in or accelerate at 5.6 versus the 5.5. Now, remember, the core services is what Jerome Powell's really paying attention to. So if this comes in hotter, or I guess, hotter than expected, does the market really share this on? We'll have to see. Let's see. Investors will also look for, like we said, the wholesale inflation data, as well as that preliminary April reading. They also talk about how China will be releasing some inflation data. We'll look for some retail sales updates, and then March 22nd meeting minutes, it will be released. And that was the information, yes, from Wells Fargo. So let's wrap it up with what the heck is this? Charles Schwab Outlook. They just go through the economic reports, which we already highlighted. I just want to show you guys their outlook. And then we'll start to get into like the technicals and stuff, right? So for them, they say, hey, look, employment data, inflation data, and the start of earnings season is a recipe for continued choppy, volatile markets. The indicators say real forward progress could remain elusive. So let me just restate that. He's basically saying, look, the market's choppy, and for us to go higher, it might be, hit or miss, right? It could be, it's just going to be real choppy. Who knows if we can go higher? Not saying we can go lower, but that's what it is, right? And so bottom line, this week's market, or talking about this past week's market action, brings to mind the old expression, be careful what you wish for, right? The Fed has been telling us for weeks, if not for months, that at least some moderation, labor market deterioration will be necessary to get inflation under control. Now, we've also been talking about that for a while, right? To see basically unemployment go up. But consumer spending still drives about 2/3 of the U.S. economy. Job losses sufficient to dent the inflation spike are likely to lead to a recession. Yada, yada, yada. Well, let me see. The choppy, directionless action we've seen this week tells me that the market is trying to... All right, here we go. This was a good part. He's saying that the market is trying to decide if bad news is good news, right? Because it might mean the end of interest rate hikes, right? So are we about to get to the pause, Are we about to get to the pause? Or if bad news is bad news because the recession is about to come, or we might be in a recession, right? And so he believes like, hey, it's going to take some while before we have an answer, right? And so that just leads to more choppiness in the market. And so, he's just saying he has a neutral outlook and blah, blah, blah. And then we about to kick off earnings season, which we about to really get into, right? And so that's the economic data, right? And the potential impacts that we have this upcoming week. Now, let's get into the other part, right? Bank earnings, right? Now, bank earnings kick off, right, this Friday. And we have, as you can see, FRC, PNC, Wells Fargo, JP Morgan, and Citigroup. Of course, all eyes are going to be on JP Morgan, right? What is this right here? That's that. I could just go see. Yeah. Okay. Give me 1 second. Give me 1 second. All right. So, like I was saying, we're gonna go into earnings season, right? So, when I think about the banks, and we're talking about going into the earnings season. Now, of course, a lot is going to be made of the whole situation that happened with the SVB and stuff. And so there's gonna be a lot of scrutiny as we go into this bank earnings season. Now, a lot of banks have already taken a big hit. Now, I don't think every bank is an SVB. So as we go into this bank's earnings season, I will not be surprised if some of them do better. And we talked about this in the last episode, where could banks be that sneaky sector where they've created this opportunity. Everybody hates the banks now because they think that this banking crisis is going to continue on, right? But could it be them playing like the whole catch me if you can game, where they want you to look left because they're going right, and really people are going to be so bearish going into these bank earnings thinking it's going to be terrible. Come this week, some of them may report better than feared, and because of that, and because of where they sit technically, you could actually see some of these banks run, right? And we talked about that on the last episode. Like, hey, look, some of these banks could be some good opportunities, because you have to think about a lot of people, when they took money from these regional banks, where did they go? They ran to JP Morgan. They ran to Citigroup. They ran to Bank of America. They ran to Wells Fargo. That's where they moved their money to. So if these banks got a bunch of deposits, they are in a position to where they don't have to offer like as high as some of the savings rates that you see some of the community banks and the smaller banks have to do in order to get business, right? And ultimately, that's the big issue with the banks, is that banks have to offer these high rates on these like short-term, say, instruments like i.e. CDs and high yield savings, but i.e. they're holding on their balance sheet long-term bonds that ain't yielding as much as what they got to pay out. So when people made that run on the bank, that was the reason why you had the whole issue, because essentially they have losses on these long-term bonds, and people getting higher rates on short-term stuff, and they basically cashing out, that they had to take those L's and pay out the depositors, and then that just caused a big issue, right? And that's why they're saying, okay, they're really scrutinizing what banks have messed up balance sheets. So when we go into this earnings season, when it really comes to banks, and shout out to my guy Dave, I see here in the comments, and actually we did an episode, I want to say last earnings season, that's probably still relevant. If you go watch that, and how we talked about like going into what to watch into that earnings season, was all about, okay, you just think about what these banks offer and what was the demand, right? Was the demand for mortgages high? Was the demand for auto loans high? Was the demand for deposits high, right? And if so, then ultimately you could think those revenues or those area of businesses did well. So that's why I said, again, we probably going into another bank earnings season where you may see some parity, where some may do good and some may not do so well. So my thing is, I'm going into this bank earnings season, I'm not necessarily going into an extra, say, like bears. I'm actually looking for opportunities, man. And I think there's a few good ones out there, where there's some banks that took some hits that, there's some, really good long-term opportunities, right? some good long-term opportunities where you can like buy and hold. So that's kind of my thought on as we get ready for this week in bank earnings season and what you might want to look for and just kind of pay attention to. I would say go back and check out the episode me and Dave did. We really like went in depth on some things that you could check out as well on that. So and so yeah, like we said, we got JP Morgan, and then that's who kind of kicks it off. So those are all of the things that's going to basically impact the market this week. Now let's go get into the technicals, right? Let's get into the technicals for this week, right? So as we look at this week and we think about the probabilities and what's to come, we know that we have CPI, PPI, and bank earnings season, and we are above 4,100, right? So if CPI, like this is kind of how I look at it. If CPI, PPI, and bank, now psychology, right? These are the different mindsets and probabilities that I'm thinking from a mindset perspective is if CPI, PPI, these numbers come in, say, low and fall in line, and then bank earnings season is better than expected, and we can have a positive week, then ultimately, right, if we have 4,100, the next level I would think is we go 4,200, right? And if I do it, I could do it from a percentage perspective. So 4,200 would be a 2.5% week. Knowing the market, they could probably get that in one day. So let's just say they had a 3% week, right? That's kind of my expectation. If we had a 3% week, that's going to basically get you above 4,200, and you would get to 4,230, which makes sense because the 4,195 was last quarter's high. So we would essentially break that high, and we would get into a gap. So let me take this off, and boom. So looking at the US 500, you see I had this gap here, and I talked about this gap in a few episodes a while ago. It's basically 4,200 to 4,228, and I'll highlight that right now. So now we into the technical part, right? And so we have this basically we have this gap right here where price doesn't connect. And for the longest, I felt like we've been wanting to go get that. And this right here is just August highs, right? So we have a gap here and then we got August highs. So the market is set up to where we have an indecision doji, right? So as we look at the from a technical perspective, we have an indecision doji right here, right? And as we kind of like replay what has played out, we essentially broke the trend line, came back, retested it, and now we are back into like I'd say a good bullish area, right? So if the data goes well and the bank earnings season goes better than expected, you definitely can have a good upside week. Now on the flip side, I feel like a lot of people are bearish. Like I feel like a lot of people feel like the market should be coming down. We just had this pullback. I feel like a lot of people are looking for bear setups, right? So yeah, we may rally, but after that rally, a lot of people are looking to get bearish. And I'm gonna be honest, I think you got to be very careful because from a technical perspective, if we get into this gap and we break these highs and earning, and now you have to think, and I don't want to go too far ahead, but after banks earnings season, we're going to get into like more of the banks, and then we'll probably get into tech and stuff. The question will start to come up well, we already know after the banks is going to be, well, how good is tech going to do? And so then we'll eventually have to get into the tech valuations and can they hold up? But that's going to get into that part of, that's still gonna be the real test when we get there, right? If tech don't hold value, if them valuations don't hold up, and depending on especially if we get into the 4,200, 4,300 before tech earnings, that's the key. If we get there before tech earnings, because if banks do well and they say, oh, everything's fine, and then tech keep running up along with everything else, you'll have to be very mindful of that. Now let's take it to the other side. What if, right? Probabilities, you got to be prepared. If the data is bad and banks are worse, right? Worse than expected. Well, let's just figure out what would like a 2 to 3% pullback look like, right? Just so we know where we would go. So from a 2% perspective, let me fix that. So from a 2% perspective, that would bring us to 40.30, right? And if you go down to 3%, that would get you to 39.90, basically breaking the 4,000. And then we know that if that were to happen, that that we probably would think a lot of market participants would be assuming that the bears are back in control of the market, right? Well, I wouldn't even say control of the market, but the bears will win that week. You know what I mean? And you might even be like, okay, are we actually going to keep continuing to rally? Because to lose 4,100 again, and to go fall back under 4,000 for bulls to then have to get back above, who knows what it would take. But after you just done all that work and just lose it again, that would hurt. A lot of bears, or not a lot, but a lot of bulls would be hurt. You would even hit probably a lot of stop losses too. So that's going to be that bear side, that you have to kind of consider is, if the data is bad. Now, I'm going to shout out to my boy, Drake, because he said, can we look at the VIX? And so, yeah, I'm going to go check out a couple of indicators, because this is why you have to think about both sides, because I'm going to show you all some indicators that I have that they can kind of go either way. So the very first one is, like he said, the VIX, right? So we go look at the VIX, and I told y'all this last week. I'm worried about the VIX, man. I ain't even gonna lie. I'm concerned. The VIX has me very concerned. Now, of course, we under 20. So naturally, being under 20, that means you're in a bull market. But let me just change. I mean, listen, all year from, this is 2023. So all year, the VIX has bounced off of this level. All year, this has been a level where when the VIX has gotten to 1834, you want to basically sell the market, because the VIX is going to bounce. And when the VIX bounce, it's going to 20, and we've been seeing, pullbacks or whatever the case may be. So this is just one, kind of, I would say, indicator that I'm paying closely attention to is the VIX. Now, I'm going to go to Tim, because I was just about to say that. Bruh. Don't nobody, okay, and I agree, because at the end of the day, so Tim said, don't nobody care about the VIX. Now listen, this shows nobody has no fear, and he's right. Nobody care about the VIX. If there's a crash coming, everybody's prepared. Everybody's ready to get puts or whatever the case may be. So there's absolutely no fear, which kind of has me thinking like we could actually, and I think I mentioned this a while ago, we could actually see the VIX go sub 17. And we're going to come down here to about this 1628, because ultimately what that would do is, if I kind of just zoom in, there's some gaps from 2022, right? And right now, you look at where we closed, this is that gap right here. If you can see that, right up in here, that we might be headed for. And we want to kind of, we want to close that. Now, not only is that gap there, but this is 2023 loop, 2023 low. Now we've already been down here. The VIX sold down and it wicked back up. So we've already been down here. So they might want to go fill these gaps down here, which means if the VIX keeps going lower, the market's going to go up, right? So that's one indicator we got there. Now let's go look at the bonds, right? So when we look at from a bond perspective, what is the bonds market telling us? Now the bond market looks good, right? We look at high yield corporate bonds. We go change this, right? If this, is building a base, but if this continues to rally, then the bonds could be telling us that, hey, the comeback is real. And really, TLT is the one that I'm paying close attention to, because TLT is more so seen as a flight to safety. So, this is about to break out, and we could be seeing the bonds run to 112. As you can see, it's built, it had a double bottom, it built a nice base, and it's breaking through this resistance. And so the next basically area of support resistance we have is at 112. So if the bonds keep running, now the market may misinterpret the bonds running as, hey, that's good for the market, and so that's why we'll continue to have this rally, right? So that's why it could be one of them contradictory things. But TLT is looking really good, right? Then let's go look at our yield curve, right? Our yield curve inversion. That's another indicator that we got to pay close attention to. Now we know that this has been the worst yield curve inversion of all, right? This has been the worst yield curve of all. And we know that as this continues to fall, that is when the recession actually happens. So a lot of economists are believing that over the summer is when we're going to get this type of drastic fall due to, the higher unemployment and some things, maybe the banking crisis and the tighter lending standards and all that starting to kick in. We'll have to see. But in order for that to happen, what I need you guys to understand is that we have to pay close attention to the 2-year and the 10-year. Now, both of those have hit some resistance and kind of like fell off hard. If we look at it from, these are monthly candles. So let me go to the weekly. But, this was the whole, the banking crisis. And now we've had the yields kind of been just going crazy. You're trading very wild. The spreads have been kind of wild. But do we see more deterioration in the yields, which, I think, that's going to impact the Fed's hand, right? If they keep raising rates, yields are falling down. That's a disconnect in the market. That is definitely something that is going to have to reconcile itself. Is we currently have the Fed funds rate above the 2-year, right? So now the 2-year is now at 3.94%, and we have the Fed fund rate is about to be at 5, or is at 5. And so when that typically happens, that's when you start to, again, a recession can happen, right? And then let's go check out stock charts. So, I got to show you all the PE for the SPX. So let's get into the valuation real quick. Let me go look up this, update that weekly and put that on a line. Boom. Oh, I need them price levels. Price levels. Give me 1 second. All right, so valuations, right? Last week we talked about valuations. So that's another thing that we got to just, double check on as we get into earnings season, right? The valuations. Now, I want you to be mindful that the PE, right, of the SPX right now, we at a 23.76, right? So valuations are high. Now, for those who didn't catch last week's episode, the reason this is so important is because the PE has risen because prices have risen. And as we get in earnings season, which is the E, the denominator, if that does not hold up, meaning we see earnings, lower than expected, we see earnings cuts, we see earnings revisions, that means that you're going to have to see prices come down if the E comes down, which means that this could potentially come back down to a 21, which would be this blue line, and even lower. And, if that happens, you got to think about it. As we've been hitting these levels, bruh, like the market been going lower and lower, right? So that's what kind of is one of those indicators that tell me like it doesn't point to a healthy market. When people try to say it's a bull market, I'm like, I don't know, because there's some indicators that just don't point to a healthy market. Where when last time we was at this 23.94, I wanted the market. This was February, right? So February high was 41.95. We're basically at that same PE, and yet the market is at just 4,100, right? So if we go to 4,200, that means we're going to be damn near back at this 24.84. And the last time when the valuation of the market was 24.84, that was October of 2021. Let's go look and see where the market was in October of 2021. In October of 2021, the market was then trading between 4,300 all the way up to 4,600. And so you telling me that we're going to have a market that's just trading at, say, 4,200, but but the valuation is the same when we was at 43 to 46. To me, that don't jive. To me, it doesn't jive. if other people, if it jive, cool, but I don't see how that makes sense. So to like, I don't know how you make that reconcile. So like my guy did, he said, yo, that P is way too high heading in the early season before a forecasted recession. I don't know how you make it make sense, man. So, yeah, that's another one. And then I'll go check out the last one that we'll look at, and then I want to get into what's the narrative, and then I'm gonna wrap it up. Is of course the NASDAQ, right? The NASDAQ. That's a weekly. This is the NASDAQ McCullough Summation Index, right? So this tells you how many stocks are advancing versus declining in the NASDAQ. So it, if it's going up, more are advancing. If it's going down, more declining. And so I want to show y'all something because, again, it points to a mismatch. Now, episode after episode, I've been updating us on this. Now, this thing has been coming down and coming down and coming down, meaning less stocks in the NASDAQ are going up, and yet the NASDAQ just keeps going up. And we know why. Because most of the big stocks are doing the heavy lifting. The Apple, the Microsoft, the Nvidia, the AMD, the Tesla, the Meta, the Google, right. That's 8. That's the, and maybe if I missed AMD, that's 9. Those are like the big companies that's doing a lot of the heavy lifting. Other than that, ain't too many stocks really doing too much. They just kind of going sideways. And so it's crazy to me that the NASDAQ McCullough summation is pointing to a lot of negativity in the NASDAQ, but yet the NASDAQ keeps going. So to me, I have to keep asking myself, is this rally healthy, right? Is this rally healthy? We're going to find out, right? And so that's the last, indicator that I really wanted to show, and just kind of that points to like some uneasiness to where I would say, you have to keep your head on the swivel, right? I know we're above 4,100, but there's some things as this market continues to rally that just, is this the last hoorah run before we actually get the real recession and a real decline? That's one of those questions. If we were talking about, don't forget, a lot of people are now saying that they don't believe 3,200 is possible. That's the perfect setup to get to 3,200. Like now that everybody's like, oh, I only think we just gonna go back and test the lows, or like I don't even know. Most of them are like, I don't even know. Like a lot of bearish sentiment has kind of gotten wiped out to where a lot of people on the street are like, we're gonna. But that's the perfect rug pull. That's the perfect rug pull. You know what I'm saying? To get that, and that's why last week's episode, or the week before last, return to normal. When I showed that graph, return to normal, then you get that nice little, everything's copacetic, and then next thing you get a big old drop. You know what I mean? So I would just say be very mindful of what is going on out here, the narrative. We got the BRICS thing, and all of that. So it's a lot going on, but again, I want to keep it to just this week. And so the big, just to kind of recap, summarize here, that the big, and as we get into the narrative, is that the big things that are going to kind of drive this week, as we know, are going to be, as we said, the big days are going to be Wednesday, because we got CPI and FOMC minutes, and we already broke down, the different outcomes from that. You got PPI the next day, and on that Friday, you got retail sales, as well as we're going to have the banks. And so it's going to be some volatility, right? I would expect that it would be some volatility, and that gets me to the last part of the episode, which is like, yo, is volatility dead, right? So coming into this week, and we have banks earnings, it's like, man, is volatility dead? Are we going to see a volatility bounce back? That's a nasty monthly rejection candle, to where I got to be honest. The thing that would concern me is if the VIX were to get back above 2075 off rip, I'm going to be like, yo, we might be going back to 30, because this thing is going to start to eat back all of these people that's trapped. And so does that kick off the start of a nasty earnings season, or just a high volatility earnings season? These are the questions that I'm asking myself, and that, I'm using to get prepared for. You know what I'm saying? So, with that, I'm gonna take a quick break. Let me go check in on the comments real quick. And let me see what I got here. Let me see what I got. Dave was dropping some comments. So he said, Chase is expanding down south. That may be a sign of strength. Seeing a lot of small banks closing their doors at the same time. Okay, that was what we talking about with bank expansion. Yeah. I can't wait for banks earnings season. I'm hyped for it because I actually think some are going to do a lot better than expected. So I'm this week I'm looking for some opportunities. 40-year mortgage going into effect next month. I would love to hear. Oh yeah. Yo, I'm gonna save that for another episode. But that 40-year mortgage stuff is wild. He said, Dave, do you have about natural gas or boil? I'm pretty sure Dave answered that. I told the runners a few months back, $10. I'm trading. Okay, boil. That's natural gas. Let's see. I've been watching the something futures. Okay. Why you got a fancy? Oh, so he said, hey Mendez, why you, because he looking out, you know what I'm saying? You know what I'm saying? He'll moderate in case these comments get wild, bro. Oh yeah, Pawn. Somebody asked me if I could look at Palo Alto. That's right. I'll look at Palo Alto. Black Swan. What's good, brother? How you doing, man? Salute. All right, so yeah, let's go look at Palo Alto real quick. I can pull that up. I got a second. And then I'm gonna wrap up with my expectations, and then I got like one more little announcement. So I mean, what about? I mean, I give you Palo Alto a beast. It just had 3 straight months. So January was up 13% or 13.6. February is up 18. This last month was up 6. So it's starting to slow down a little bit. They have earnings in looks like May. So it is at an area where, was resistance, right? And so, it could pull back a little bit, but if it don't break that one, it would have to break this monthly low for me to be concerned. So until it breaks this monthly low, it's still bullish. And, I will be looking for it to come attack these highs, which is about 213. So long as it don't break 180, 163, I'm looking for 213 on Palo Alto. It's a strong cybersecurity company. So, I don't know why you might be bearish on it unless you think, high. Only thing I can say about them is they valuation high, right? And so when we in a high interest rate environment, maybe they get dinged because it's so expensive. But again, it's one of the premier players in the cybersecurity space. So they go at a premium. They like the NVIDIA of cybersecurity, right? So, yeah, so that, who knows? So let's go back to technical outlook and just kind of, a nice little summary here. So we right at 47 minutes. So we broke down like what happened last week as far as just, the NFP numbers came out kind of hot. So they point to a 0.25 and the economic data is pointed to a recession as far as the ISM service and stuff like that being down, right? We know this upcoming week, we said that the biggest thing we have is going to be the inflation data, right? And then bank earnings. Now, the way the market has been moving, we can, if we do a 2.5 upside, 2.5 to the downside, that gives you some bare minimal expectations as far as movements, right? So we do 2.5 to the upside. That points us to the market going to right over 4,200 this week. And then we did 2.5 to the downside. Now, these are extremes, right? These are, some extreme as far as, just baseline. So 2.5 to the downside is 4,000. So, we could go as low as 4,000 if stuff gets bad, or we could go as high as 4,200 if it's okay, right? And so, at the end of the day, you really, this is going to be a tough week to trade. I'm going to be honest with you, man. This probably going to be a tough week because it's all going to be data dependent. And so you at that point, you're just taking chances. I mean, you can, you can say, okay, based on what you see technical, I'm going to take this, but just know news trumps charts. So depending on how this news come out, we have to see, especially with earnings there. So my point is this: the market will have a lot of data to digest this week. So we could make some big moves, or we could just kind of be real wiki and not go nowhere, right? And they just kind of burn premiums and just kind of keep the market stuck until they get all the data they want. And we have another sideways week because, man, this market again. Charles Schwab said it. It just points to a choppy, directionless week, right? And so we could just get another one of those where we don't really get any resolution, and the market just goes sideways and keeps us in a holding pattern. So that's one of those things you can watch out for. And so, that's really, how I'm looking at this upcoming week. I do have some individual, I would say medium term, longer term outlook positions that I'm looking at that as far as for the quarter. You know what I'm saying, as we get ready to transition into this next environment. So that this is basically, this is the episode. So we have 50 minutes or so. So it's actually going to end up a little bit early. It's Easter Sunday. So what I was going to say is, on here, right, I'm going to give a lot of information, right? And I give you some good information where you can take this and do your own homework and go a little bit further, right? But I do understand that some people, they may say, hey, I sometimes ask people like, what's your excuse? They may be like, I really just don't have the extra time to really do a lot of research. And, I just, I'm limited on time. I want to do the work, but I can't. So I got to thinking, and I was like, maybe I can help them out. So I came out with a solution. So as we end this episode, I just want to let people know I've launched a Patreon group. And what this Patreon group is, essentially, I'm going to give people inside access to my mind, right? So I will put up, some of my trade ideas as well as, plays that I'm watching. So I'm going to share my watch list, my private watch list. Now with my trade ideas, this is the information you can expect. I'm going to give you my whole thesis, right? I'll give you the levels that I'm looking as far as the entry, what my stop loss targets are. And you're getting really my why, right? So it's really like you could cheat off my test, right? It's like an open, like, what I'm saying? It's like the student that studies for the test, I can give you the answers, right? And so, and so I'm just laughing at one of the comments. And so this Patreon, that's basically, it's for people who like say, look, I don't have the time. So I'll put out ideas out there, monthly as well as a weekly watch list. I give you some levels. And it's really just to help those people who want to be in the market, but they feel like they struggle. Now, this ain't for no beginner, because if you don't know what you're doing, like it's not a whole bunch of support. Is literally you get access into my mind. So you need to know what you're doing, right? If you brand new, this may not be for you. You need to have somebody, you need to be somebody with a little bit of experience and that knows the game. And it's just like, if you give me the homework, I can look over it. I'm gonna double check and make sure I'm good, and I understand my risk assessment. So if you're not at that point, this may not be for you. So I'm gonna make that very, very clear. This is not for no beginner, right? Or I'll make that clear. It's really not for a beginner. It's for somebody who, they have studied before, but they just like, I just don't have the time, right? So I'm gonna give, so I'm gonna give you some. And the other thing is I'll tell you like, hey, these are some of the kind of the positions of how I'm looking at the position. So it's really good value. And like I said, it gives you an inside look. So like, it's not no guaranteed returns, but what I can promise you is that you're going to get well thought out trade ideas. It ain't no meme stock and like telling you to, let me also say this. It's probably going to be more for people who can't even day trade and look at the market every day, because the positions that I'm recommending are usually longer positions, swing positions, because that's mainly what I am, right? I'm somebody that I don't want to look at the market every single day. So the positions I'm gonna give you, they may take some time. So if you somebody that's in a rush, right? If you somebody in a rush that's looking to, make something every single day, again, this may not be for you, right? Because some of these positions may take some time. However, a lot of them be bangers though. I ain't gonna, I'm gonna just say that they be banging when they, what I'm saying? You might have to, be patient, but and if that's one of the things that I would say, if you ain't patient, right, and you need to get to that level, come holler at us at the Runners. I can help, we help get you up to that level. So I just wanted to drop that note. So I'm saying, like I said, it ain't for everybody. It's definitely for the people who, so that's just like something that I wanted to do to kind of, put some more value out there. So, definitely check that out. Again, the link will be down in the description. So with that being said, y'all, this was another episode of Sativa Sunday, and I appreciate all y'all rocking with me on this Easter Sunday, man. I hope you all have a blessed Sunday with your families, and enjoy the rest of the Sunday. Until next Sunday, man, y'all stay blessed and peace out.